This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Doubling growth every year since its inception. That's something we all hope for each of our businesses, right? We want to double growth or more every year. That seems like a dream. Well, our guest today has done just that. We're going to talk in depth about how she's done that. Her name is Alex Moore. She's the founder of Greywhale Capital, a multifamily real estate investment firm based in San Francisco. She's led Greywhale Capital, yes, to double growth year over year since its inception. She builds deep relationships with investors, brokers, deal finders, and property management to acquire the best investment opportunities and primarily off market. So Alex and we're going to do this, probably be a series of shows. It's a longer interview than normal, but I wanted her to be able to talk about some of these things in detail, right? I wanted her to be able to talk about how she hires and who she hires and how she sets those objectives for each employee, and even meeting cadences and even how she measured her growth. And you're going to hear that, but then you're also going to hear us talk about that kids a little bit. You're going to hear about what she expects in the market over the next 12 months and how that's changing what she's doing. You're also going to hear how she determines a reserve budget for her properties. I love asking operators that because I want to make sure we're as prepared as possible. And I know you do as well. Or if you're a passive investor, you want to make sure your operating team they're prepared, right? And so you want to know some of these things, right? So you're going to learn a lot from Alex in our discussion today. I have no doubt. Enjoy this series with Alex Moore. I want to get to how you've done this, right? How have you doubled, growth every year? And let's dive in and to some very practical things that I know you do. You've studied, you know these things, and I want the listener to be able to think through these things as well. Whether they have one employer, whether they have 25, and here's some real practical things that that you've put in place that's helped you do that. But maybe you can speak at a high level how you've doubled, and then we'll dive in a little more. But then also how you measure that.
So I measure growth based on total assets and what those values are. I think when you especially are starting a private equity firm, it's hard to do your revenue at the beginning because it's very fluctuating. And a lot of it's dependent on acquisitions and whether or not how your agreements are with your LPs. And so can be very all over the board. So I do it based on total assets. Started with one duplex and one short-term rental that I acquired at the same time within a 2-week span, like crazy story. But from there, it was once I would get an asset stabilized, I would refinance it, get the equity out, and roll that into a new asset. I did a few 1031 exchanges. It was just very measured, like this is where I'm going to go to this next one and get into the next asset and the next asset. Also, creative financing at the beginning was helpful too. So we had some seller financing, which really helped accelerate some of the other asset classes that we did. Industrial in particular really helped with that, so that we could get into a bigger asset than I thought we could. And additionally, it was living lean, which I think is a practice that we've done for a long time. I'm Dutch by background, Dutch people are known for being frugal. And so I like to reframe it frugal instead of cheap. So we, live reasonably and basically funneled everything that we could into the business and growth. So that's been very intentional there, seeing it as a long-term horizon and building a good foundation now and really determining where the next steps are every year, just assessing goals and then quarterly goals.
Okay. So a big way you're measuring it is like AUM, assets under management, yes, or, the value of those assets. And so let's get into, I know in some information, your team submitted, talked about like just creating clear objectives, outcomes, internal metrics. I know often it's hard to determine what those metrics should be, especially per employee, and what are they responsible for? And everybody needs to know what they're responsible for, right? And it's so helpful to have it written down. I think, for each employee, and so everyone knows. And so can you talk through a little bit about how you've done that internally and what that looks like? And let's just flesh that out a little bit.
Yeah. So we use 3 major tools in the company. The first one is Asana. The next one is Slack. And then we also use Google Drive. The way we really track our weekly metrics are through Asana and doing weekly reporting. So we have a deal flow board that is pretty intense. all the way from like, is it an eligible deal, something that fits our buy box criteria, to accepted LOI. Then it moves into its own deal board once we're into that accepted LOI stage and moving forward into PSA and due diligence. So we do pretty heavy tracking on the board, and each person is responsible for a different stage in that board. And it's clearly marked and known by each person. So when it gets into is it eligible? That's one person's. Rent comps is another person's. And then we go into underwriting. Then it goes to PM pro forma. Then we go to LOI stage. And then we go to hopefully accepted LOI into the next phase. So that's been very helpful for us to have a clear tracking. Additionally, we have a Google Drive, which we use extensively. So all of our SOPs are in there. So how do you do rent comps? I know that sounds crazy, but like if you're offloading that to someone in your team, which you have to at some point, like you can't do your rent comps, and I can't rely on my PM to do the extensive rent comps that we do. I want them to have all the information when we present to PM, like with our performance. So we have a rent comps SOP. We have, how do we do eligibility tracking for deals? Because we have a whole deal, like before it hits our deal board in Asana, we have a whole tracker in Google Drive that tracks every eligible deal that hits our table. And do we want to take a look at it and move it into the next phase? So we have, how do you do that? How do you source deals? We have broker callback tracking. So making sure that we're hitting those, and like red lighting. We do red and green lights. Have we hit, enough callbacks for each week? And when was the last time we touched base with XYZ broker? Because you never know what they're going to get too. It's like, you might talk to them one week and the next week they're like, actually, I have these 3 deals that are off market. Like, take a look. They might be crap, but you should definitely take a look. And so just calling and staying in touch is really important. So we kind of have that tracker too. And those are just some of the tools we felt have been really helpful, because we focus very heavily on acquisitions as the team, because you have to look at so many deals to find one that works. And it's a numbers game, and it takes a lot of manpower to look at those, but I couldn't do it without tracking. It would just be a mess.
It's helpful to know what tools you're using as well. And are those integrated? We use those same tools, by the way. But I want to ask you, are you integrating those together? Maybe some workflows of how they work together just briefly, and then we'll jump down something else.
When we move a deal from our global tracker in Google Drive, like our spreadsheet, we will then link that to its own folder. So each deal that's eligible that we're going to be underwriting gets its own folder in Google Drive. And so that's linked in our Asana board. So when you click on a deal, each deal is a task, and then each one has a link in there with its own associated folder, and that has the underwriting in it, has the rent comps in there, sales comps, the Yardi or CoStar brochure, and then any other supportive financials are in there as well. So it keeps us super organized by having each assigned one have a link. Otherwise, you would just be hunting and pecking, because Google Drive, one of the things I don't like about it is its discoverability is a little difficult. I know that other folks have transitioned fully over to Notion. I find that I've tried it a couple times, and I still like the functionality of Google Drive in a lot of ways. Tons of people have said they love Notion. So that might be a good alternative to people, because I know that discoverability is a lot better there. But I find that specifically integrating those links into the boards is super helpful for tracking those along.
Yeah, no, that's awesome. Very helpful. I know you said that you're very focused on acquisitions. Speak to, the focus on acquisitions versus, say, investors capital raising.
Each company has to choose where they're going to put most of their powers towards, and you can't do fully one or the other. You gotta have both. But I know that there's certain companies that just focus on capital and being more capital allocators. I think you have to find which piece of the puzzle you feel is you're best equipped for, and ones that you feel are the best for growth for your company. I have always enjoy looking at real estate. I love numbers. I love looking at what you can do to businesses and turn them around, and I think of properties as businesses. They are their own entity. So that part of it, I feel like, is a real strong suit. And I've always felt comfortable exploring new markets. And I think that's another thing that I've grown to be really competent at it in a core competency. When it comes to capital raising, I really focus on a few key relationships and then have been organically growing from there. And I think that's really helpful. Is I'm also more of an introvert. So I feel like I'm much better at creating those longer term few relationships rather than of the many. I do know successful introverts who've grown a like very prolific capital raising platform. But for me, it's really difficult for just energy level to do that. And I know it's a muscle I could probably push into, and I probably should, but really I've been focused on finding the good assets to acquire and building that system out.
We're going to speak into a little bit, maybe your team and, how you are creating the clear objectives for like individuals, right? Individual people and those outcomes, and even the metrics, how you're really gauging maybe performance or what that looks like. How do you do that on an individual basis and figure that out? Because it can be daunting, right? I mean, it can be a lot to figure out, because when you first start, it's like, okay, there's just me or eventually there's me and one other person. We're kind of doing everything, right? Well, then we bring somebody in and we want them to focus on this one thing, but then pretty quickly they're doing lots of other things too, right? And that happens, after a few first hires maybe, but then I feel like steam, even picked up for us more when we can say, you know what, we're hiring this person for this role like that. This is what they're really good at. That's where they're going to be focused. Right. And it's even easier to like gauge these things, right. And have those clear objectives at that point, but there's a transition there, right. But how did you do that? How did you lay out clear objectives and maybe describe your team a little bit?
Yeah. So currently I have 2 staff members. I have a full-time analyst and a full-time EA, and then I have interns as well, which is, pros and cons with that too. I think we can touch on that more. But I find that when you have someone who you're employing, it's very different than you yourself as the founder or, the starter of your business. That like you're the go-getter, you're the person who just, figures it out. And I think that it's important to realize that your team, you want to create that owner mentality, but you have to give them a lot of guidance and guardrails and say, hey, this is the role that you have. These are the things that we want you to do well at, because people want to feel like they're doing a good job. That's like at the end of the day, people want to feel like I'm contributing to the company. I'm doing positive work that's moving the company forward. So we focus on for each person, these are your daily objectives and these are the weekly objectives. And we have goals for each person for did we hit those? So as a company, we want to underwrite X amount of deals in a week that meet our eligibility criteria. So the reason we track that is because if we're not getting enough good eligible deals into our pipeline, we want to know that. So if we're dropping off on eligibility criteria, hey, do we need to widen the net? Do we need to get some more relationships going? And we also track how many LOIs we submit a week as well. And so each person's involved in that deal flow process. So it's really a team effort. Hey, did we hit that number by the end of the week? Additionally, we track our outreaches to investors into other capital providers. And are we maintaining those relationships? So those are things that you need to have capital in order to buy these assets. So tracking that has been really helpful for our team too. So we do that weekly. We also do monthly reviews. Hey, did we meet our objectives for the month? Where are things that were obstacles for us? We follow like obstacles and overcoming those. And then what are our next steps for the next month? And I think that's really helpful for people because they're part of that planning and then they're part of that accountability monthly. It does take time and effort. I think that's the other thing is like really as the owner saying it's worth my time and it is worth my employees' time to be part of this together because otherwise we're each doing our own thing. So being intentional about that is really important. And then finding the people who are motivated. That's really where the internship comes in is I want folks who are excited and fired up and that this is a really big opportunity for them to really learn how to acquire large assets in multifamily. And I'm happy to talk about any other asset class too. If they find that their fire is lit on a different asset class, I probably know an operator in that and I'm happy to get them set up on that. And so I think that's really, interns can be a really great tool for companies to use too. Just finding people who are motivated and who are excited is the really big first step. We have in our interview process, it's like 3-pronged so that we can really, by the time that someone makes it through, we're pretty confident that this is going to be a good person to work with.
That's intrigued me a little bit. I wasn't planning to go there, but I've got to ask you, okay, explain that 3-prong hiring process a little bit. I've talked about hiring a lot on the show. I know the listeners have heard me talk about it, and we try to also have a very detailed approach in finding that motivated individual that's a good culture fit, right? And an expert in their position, all those things. But what's that 3-prong approach? Elaborate there a little bit.
Yep. So for each role, we have a screener. So we have an initial, hey, thank you for being interested. We'd love to know X, Y, and Z questions from you. That weeds out a lot of people. If they're not willing to answer your first set of questions, great, awesome. I'm glad we got that out of the way. We didn't waste anybody's time. After that, then I usually do a first round interview and keep that short. So I keep it to 15, 20 minutes. Can they carry a good conversation? Do they have good questions? Do they seem like they're really engaged? If they make it past that one, then we do an assessment. So we do more of a project, like a homework project. And I tell everybody, don't do this like intensely. I don't want you to be spending hours on this. I really want this to be a first pass 1 to 2 hours max. List out all the questions you have. I just want to see how you think so that we know, are you a critical thinker? Are you taking it to the next level? Did you make it past the first couple of hurdles of the assessment to get to a level that seems like reasonable for a couple of hours of work? And then we'll have a second interview. And so after that point, then we'll do an offer extension, review that together. We keep our offers really, really to the point. Hey, it's at will. We would love to have you on board. These are the expectations for the role. And these are the goals we have for you. And we also want people to write down goals that they have in that contract. So like, what do they hope out of working with us? What do they hope to get out of that? Because I think really that's something that a lot of times people don't ask is, what are the things you would like to get out of this? Because it's a reciprocal relationship then.
That's awesome. That's awesome. I wanted to ask you, the homework project, is that, how do you do that? I assume it's based on the role you're hiring for, but maybe give us an example.
So for our EA, they have a social media component. So I would say like sample of work done for that, or we'd like you to research this topic and write a brief about it, because we do some topical things for our newsletters. So just getting an idea of writing style and ability to do some research. For our analyst role, we've done a few different tests on that, and I go back and forth on which one is the most effective, but I generally ask for a sample of anything they've underwritten before. And then I give them a sample property. So just financials. I just rent, roll, T12. That's all you get. And then I give you our tool. And what I have loved seeing in the most recent applicants that we've gotten is that people are like, actually, I built my own underwriting tool. And I'm like, great. I love the initiative that you took in doing that. Like, I think that's amazing. So, but giving them the raw data, because a lot of folks apply for analyst roles and they are fired up, but they don't know how to underwrite. And I think I just don't have bandwidth right now to do the full Monty. We do really intensive trainings once you're on board, even if you are good at underwriting already. You do at least 3 full underwrites that we walk through every step of the way and do feedback every day. So it's like a 20-minute meeting every day so that we can get detailed on that, because we want you to feel fully competent on underwriting so that we aren't missing anything, because that could be a real big oops.
Yeah, for sure. No doubt about it. Yeah, I love that they've built their own model. Man, it really shows how much they are going to know about the detail of that model, right? Yeah. It's so easily broken. So they need to know every detail. I just appreciate the examples too. I love the just practical things that the listener can take right now as well. So you mentioned using interns. We won't spend a ton of time here, but how do you find them, and has that been beneficial?
Yeah, that's a great question. So interns, I have a couple of folks who will do social media posts for their interns. What I've actually found is that I have enjoyed working with folks who are already in school for something. So undergraduate or graduate programs, and sourcing them for summer internships, because these are folks that are exploring where they're going to go in their career. They have an understanding of some of the workforce, but they're really have the energy. I mean, they're in their 20s, which I love. Like, I'm like, hey, you stay up until midnight anyways. And that's like normal for you. For me, if I'm up to midnight, I'm, really struggling to stay up. So I found that like working with local schools and, or in even my own hometown, like they have a few internship programs and sourcing candidates from that. So I get in touch with the professors, or I've got a few like leads, and then I just get into their applicant pool and start reaching out to them and say, hey, this is the internship we have available. We'd be interested in hearing from you if you're interested in learning more. And we've had pretty good response rates from that. And so we'll just pump those emails out, and then we'll get people through the cycle. And we found some really good candidates through that. So. All
right, Alex, shifting gears a little bit. So if you could look back now, when you were making that transition, or you're thinking about real estate, or maybe even before that, knowing what you know now, what would you tell yourself, maybe even before college, or maybe even younger, or, what do you wish you had known, or what would you have done different?
Yeah, I think, man, if I had been able to talk to myself when I made the decision to go into medicine when I was 16, I did a few internships and shadowed people that I really respected. But I think if I really would have pushed the envelope and felt comfortable saying, okay, what would it look like if I did anything, and really have talked to more people outside of traditional career trajectories, like getting it down into, if you own a landscaping business, I think that would have been a really good thing for me to just have had exposure to, like, how do you run that business? How do you scale that business? Why'd you get into it? Just from talking to small business owners would have been a really huge exposure to me, because I had it in the family, but at that age, I didn't really think about approaching it from that perspective. And maybe that's where I'm at now versus what I was at then. But I think the owner mentality of how that happens and how do you create a successful business, I think having more exposure to that younger is huge. I know that there's schools that, promote that entrepreneurship early. And I think it's such a good thing for kids, because you're so creative when you're younger. You have less inhibitions, less concerns. It's the perfect time to start something. It's the perfect
less fear, right?
Yes. And you have less on the line. Like, sure, your business, folds. Yeah. It doesn't matter. You've tried. And I think that's so awesome. So I would love to have had that exposure earlier. I think also understanding that having a better financial understanding younger for how to build a successful path to wealth and sustainable growth, I think would have been awesome. I would have loved to have had someone say, buy a duplex and house hack for your first thing, or do that for college. Like, that would have been, I totally would have taken him up on that. If I had even thought that was a possibility, that would have been a huge thing. And opening your concept, I think anyone who can kind of inspire younger people is huge. Because I did have a few key mentors through undergraduate and graduate school that really helped me see a higher potential for myself. And the more people you can have that, the better. Because I think we often are our biggest limiters when it comes to how far we push ourselves.
Yeah. I'll tell a quick story. I was in a group of entrepreneurs not long ago, and one of the guys there, he has a successful business, but he also farms some, I think mostly for fun, but they just enjoy the farming, and I enjoy it as well, but it's not, thankfully my livelihood is not, on the farm. Right. But his boys, he said when his boys got 5 years old, 5 or 6, he bought them a calf, and it became their business, right? They had to learn responsibility. They had to care for this calf every day, right? Well, they finally take that calf to market. And then at that point, he's paying for all the feed, everything. Well, they sell that calf, and then they go and then they get to buy one. And then they're spending, right? It's money they feel like they've earned anyway, right? And they're spending their money, quote, you're right, on this calf. They get the next one, then they can afford to pay for the feed then as well. And so they're getting to go to the store and buy the feed, and they're getting to track these things. And then by the next time, he said, they can almost buy 2 calves. And so he said, his 12 or 13-year-old now has a whole herd, of their own. Right. And so it becomes their own business. He said it may not be extremely profitable for them, but the lessons learned are just amazing. Right. And so, that made me start thinking about that, just what my boys can start doing. Right. How can I encourage that? How can I just start building that in them now, even to give them that experience like you're talking about? Man, if I could have just house hacked, learned a little bit about business and the opportunity, it may have just, made you pivot altogether a lot earlier. Right. So do you have any predictions, Alex, just in the real estate market over the next 6 to 12 months? I know a lot of people ask this, but really, maybe lean on have you changed your underwriting? Are you still buying or selling? Are you depending on what you're expecting over the next year or less in the market, how's that changing, how you're looking at deals or what you're doing?
I'm glad you asked that, because I think that's been so on everybody's mind, is where the markets have shifted and where debt is now so different than it was just a few months ago. I think we're seeing some good pricing correction. So I think that offers some good opportunity for people to get more reasonably priced assets, or ones that are now closer cap rates to being reflective of their asset class, which I think, that wasn't something that we had for a long time. So that's been, I think, a good thing. In response to that, though, also there's been an equity shift too. So from traditional retail raises, those have been a little bit more difficult. And so I think diversifying your equity pool outside of people who are just reliant more on stocks into people who have more consistent, large, cash flow coming in and have equity that they need to deploy if you're doing traditional retail raise. Otherwise, expanding into other equity sources like private equity, I think is a good one to just diversify out of. But over the next 6 to 12 months, I would anticipate that we're going to see some more reasonably priced assets. We're going to see likely stabilizing of financing. I think we'll have probably a couple more hikes. And so getting more creative on how you're looking at financing for value add product for us. Traditional bridge was what we used to model out all the time and acquire, but now we're looking at more fixed bridge products and doing lower leverage. And so finding assets that can do that, it actually gives you more stability in your asset because you have less leverage on it and you have a fixed rate. So as long as your investors are okay with that and doing a potential just 5 year straight hold, I tend to be pretty conservative and have lower risk profiles, and that is reflected in my investor base. And so I think that's, just being creative about how you're financing these, especially with the rate environment of where it's going and the predictions for what SOFR will be. And so, and call your mortgage brokers all the time, just like have a regular check-in, see where they're seeing rates at, because everyone's going to have a little bit more, pessimistic versus optimistic. And when you don't have an active deal, that's a good time to get a real temperature, because when you have an active deal, everyone's going to promise you the world. They're going to say, yeah, we can get you this rate. And so you need to know that before you actually get your deal, that, hey, this is a reasonable rate to be projecting in my underwriting. And when I'm going into fast and final, I have assumptions that are correct for making the deal metrics work on conservative leverage.
How can the listeners get in touch with you and learn more about you?
Anyone who wants to reach out, I love meeting new people, and we love welcoming more people into our fold. So greywhalecapital.com is a great way to connect. And Greywhale is spelled with an E. And then also I'm somewhat active on Twitter, trying to get more active, but it's Alexandra C. Moore on Twitter. So either one of those are great. If you DM me on Twitter, I usually am fairly responsive.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.